Welcome to the deep dive. Salesforce just posted, well, a record year. We're talking $37.9 billion in revenue.
Yeah, and that first ever $10 billion quarter is quite a milestone.
It really is. And it feels like more than just numbers, doesn't it? It feels like a shift maybe driven heavily by AI.
Definitely. Salesforce is a leader in CRM. We all know that. But they're really positioning themselves now as an AI-first platform. You see it with this new Agentforce offering.
Right.
Their mission is still connecting companies and customers, but the engine now is very explicitly data, AI, CRM, and trust. And they emphasize trust a lot.
That trust layer is key. So for this deep dive, we've got their FY25 annual report right here. And our plan isn't just to read out figures. We want to really unpack the business segments, get under the hood of the financials, and understand their plans for shareholder value.
See what's actually driving those big numbers, like the $37.9 billion revenue, that huge $63.4 billion remaining performance obligation.
And the $13.1 billion in operating cash flow, that one jumped out at me.
Substantial.
Yeah.
So yeah, we need to look at the what, but also the how and the why.
Yeah.
What are the pieces, what's fueling growth, and importantly, what risks are they flagging?
Okay, let's start with the business segments. They've got several core areas all getting this AI-first treatment now. Sales-first agent force for sales. What's the deal there?
The core idea is basically augmenting sales teams. Think AI assistants.
Okay.
Not replacing people, but handling routine stuff, maybe initial outreach, scheduling, freeing up the humans for, the complex negotiation, relationship building.
So boosting productivity.
Exactly. Accelerating growth is the goal they state. It's about shifting where the human effort is most valuable.
Makes sense. And service. Similar idea, I assume.
Pretty much. The Service Cloud is their integrated platform for customer service, field service, again, with AI baked in.
Right.
Agentforce for Service can handle the simpler, high-volume interactions, but it also acts like a co-pilot for human agents on tougher cases, while suggesting answers, pulling up relevant knowledge articles instantly, even routing cases automatically.
Yeah.
It's about efficiency and personalization, improving the experience.
Got it. Streamlining and tailoring.
Yep.
Now, platform and other, that sounds more foundational.
It is.
What?
That's the Salesforce platform itself. That's the toolkit, really. Low-code, no-code tools so businesses can build their own apps, workflows.
And now AI agents too, right?
Exactly. With Agentforce capabilities built in. They really stress the trust layer here for security and Hyperforce, their infrastructure. And importantly, they could talk about openness, letting customers connect their own data sources, integrate with other systems. It's not a totally walled garden.
Empowering innovation within their ecosystem.
Okay.
Marketing and commerce.
Yeah, this is about personalized engagement across the whole customer journey. Agentforce for marketers can help automate things like drafting campaign briefs or generating ad variations.
Taking over repetitive tasks.
Right. And optimizing campaigns using AI insights. They talk a lot about these operational customer profiles.
What does that mean exactly?
Think of it as a dynamic 360-degree view of the customer. Purchase history, website clicks, service interactions, maybe even social mentions, all pulled together.
Ah, okay.
So both the AI and the human marketers get a much richer picture for better targeting and personalization. And it needs to link seamlessly with sales and service data, of course.
Makes sense. And finally, industries. The specialized play.
Exactly. Tailored versions for specific sectors, finance, healthcare, you name it. These come with pre-built, industry-specific AI features. And their industry's AI component helps these companies build their own custom AI agents using Agentforce, but focused on their particular industry needs. It's about providing relevance out of the box.
So AI is really the thread running through everything now. Stepping back, what's the high-level growth strategy then?
Well, it's doubling down on generative and agentic AI across the board. That's clearly the big bet for future growth, for deepening customer relationships and attracting new ones.
And expanding in cloud computing generally.
Right. They want to maintain and grow their leadership there.
And that stat. Over 90% of the Fortune 500 use Salesforce. That's just huge market penetration.
It's massive. But that market is also incredibly competitive, which leads us to the challenges they outline.
Right, the risks. What are the big ones?
Competition is definitely front and center. It's a fast-moving market, fragmented, relatively low barriers to entry in some areas.
Who are they competing with?
Everyone, it feels like. Specific software vendors in niches like sales or marketing tech, big productivity suites adding AI features, pure platform companies, and crucially, younger, potentially more agile competitors building AI from the ground up.
So pressure from all sides.
Yeah, and the type of competition is changing too with these specialized AI vendors popping up. That's a real threat.
What else are they worried about?
Just keeping up. The pace of tech change is relentless. They need to constantly innovate, expand services. There's uncertainty around new stuff like Agentforce and Data Cloud. How will the market adopt them? What's the right pricing for consumption model?
People risks too.
Absolutely. Relying on key managers, key developers. Losing them could hurt. And maintaining that Salesforce culture as they scale globally. That's always a challenge for big tech.
Anything else stand out in the risk factors?
Yeah, quite a few. Potential losses on strategic investments, the whole maze of global data privacy laws, GDPR, CCPA, data transfer rules. That's complex and costly.
Always evolving.
Right. Industry-specific regulations impacting how customers can use their tools. Potential liability, like that Backpage litigation mentioned. Cybersecurity is constant threat, obviously.
Yeah, sure.
Dependence on infrastructure, making sure they have the capacity. Integration risks when they acquire companies. Just the strain of growth on people and systems.
It's a long list.
It is. Even internal sales org changes can cause disruption. Longer sales cycles for big enterprise deals. Forecasting challenges in a volatile global economy that impacts IT spending. It's a lot to manage.
Definitely paints a picture of the landscape. Okay, let's pivot to the financials. We mentioned the headlines, but let's break down FY25 more.
Sure. So revenue, $37.9 billion, up 9%. RPO, the future revenue pipeline, $63.4 billion, up 11%.
Strong indicators.
Very.
Right.
Operating cash flow, a big one, $13.1 billion, up a whopping 28%.
Wow, and margins?
Improved nicely. Non-GAAP operating margin hit 33.0%. GAAP margin was 21.6%.
So profitability is up.
Significantly. GAAP income from operations was $7.2 billion, up from $5 billion the year before. Non-GAAP was $12.5 billion.
What was the main engine for that revenue growth? More customers, higher prices.
The report is pretty clear. It was primarily volume-driven. New business, so new customers, plus existing customers upgrading or adding more subscriptions.
Yeah.
They explicitly say pricing wasn't a major factor.
Interesting. So land and expand, basically.
Seems like it. Expanding the footprint and deepening the usage.
How does the revenue split between subscription and services?
It's overwhelmingly subscription and support. That was $35.7 billion, up 10%. That's 94% of the total.
Wow.
Professional services and other made up the rest, $2.2 billion, actually down 4%. It really shows the power of that recurring revenue model.
Definitely. And the jump in operating income and margin, how did they achieve that?
Simply put, revenue grew faster than costs. Their overall revenue growth outpaced the increase in both cost of revenues and operating expenses. Better operating leverage.
Okay, let's get into those costs. Cost of revenues.
It went up in dollar terms, mostly due to employee costs, like stock compensation. But it was partly offset by lower amortization of acquired tech and lower service delivery costs. As a percentage of revenue, it actually went down.
That's good. What about OpEx?
R&D. R&D increased, again, mainly employee costs.
Yeah.
As a percentage of revenue, it ticked up slightly. They expect that to stay pretty consistent given the heavy investment in AI and tech.
Makes sense. Sales and marketing.
Up in absolute dollars, yes, employee costs again. But down as a percentage of revenue.
How come?
They pointed to relatively lower employee costs and less ad spend. They expect that percentage to keep decreasing as they focus on, self-serve channels, partners, and using AI for sales productivity.
Efficiencies there. G&A.
General and administrative rose due to employee and professional services costs, but it stayed flat as a percentage of revenue. They hope AI can help bring this down over time through process improvements.
And those restructuring costs.
Yeah, $461 million, mostly employee transitions, severance from restructuring efforts. They don't expect much more of that going forward.
So targeted investments, but also a real focus on efficiency across the board. What about the balance sheet highlights?
Looks solid. Ended the year with $14.0 billion in cash equivalents, and marketable securities.
Healthy cushion.
Yep. Unearned revenue was $20.7 billion. We already mentioned the $63.4 billion RPO, and they have about $8.5 billion in principal due on outstanding debt.
Okay. And cash flow performance again?
Yeah, that 28% jump in operating cash flow to $13.1 billion is impressive. They do note the seasonality Q1 is usually strongest for cash collection because of Q4 billings.
Right.
And they spent $3.2 billion on capital expenditures in FY25, investing in infrastructure.
Now, shifting to shareholder value, what specific actions did they take?
Two big ones, really. First, share repurchases. They bought back $7.8 billion of their stock in FY25.
Significant buyback program.
Very. And second, they started paying a dividend. distributed $1.5 billion to shareholders this past fiscal year.
That's a major step, initiating a dividend.
It is. Shows confidence and a commitment to returning capital directly. Plus, they still have access to their $5 billion credit facility if needed, giving them flexibility. It all ties back to that strong financial performance and cash generation.
So clear moves to reward shareholders. Okay, let's wrap this up. Putting it all together, what's your assessment of Salesforce moving forward?
I mean, the indicators are largely positive, right? Strong growth, record margins and cash flow, that huge RPO. Their big push into AI with Agentforce seems timely and strategic. And they consistently emphasize their core values: trust, customer success, which grounds them. But
the risks are real.
exactly, that competitive landscape is intense and constantly evolving. Managing all those risks we talked about, tech changes, privacy, security, economic headwinds, that's going to be critical.
Continued investment is needed.
For sure, in AI, in infrastructure. But they also seem focused on finding efficiencies, which should help margins. Overall, I'd say the outlook is positive. Strong market position, clear focus on innovation, especially AI, and now delivering direct shareholder returns.
But they need to navigate carefully.
Absolutely. The tech world and global economy don't stand still.
Some great insights there. Hopefully for you listening, this deep dive into Salesforce's annual report gives a clearer picture of their health, strategy, and the road ahead.
Yeah, and it leaves you with something to think about, doesn't it? With Salesforce embedding these AI agents so deeply, how could that fundamentally change how businesses actually work day to day? Not just using Salesforce, but operating entirely. It's a big question about the future of work.